What's going on, everyone? Hope you're all having a great day so far. I hear this question all the time from several people, all ages, all walks of life. Where can I learn about the stock market? Now, that is a tough one, but it shouldn't be because there is an answer to this question. However, most people do not go through the right avenue to get their information when it comes to stock financial markets. So we're going to go over information saturation, how there's so much information out there on the internet especially, and so little qualified folks to verify the data or what's being said, opinions being thrown around, things like that. How do you determine the difference between an opinion and a fact? Well, that's where source documentation comes into play. Now, the first question is, where should I research financial markets? Well, if you look at most people, where they get their information from is these top 5 things. Number 1, financial news websites. Many people rely on financial news websites like Bloomberg, Reuters, CNBC, and Yahoo Finance to get the latest news and information about the stock market. These websites provide real-time updates on stock prices, market trends, and expert analysis. Social media. This is a big one, especially within the last 3 years. Social media platforms like Twitter, LinkedIn, and Reddit have become popular sources for stock market information. Many investors follow market analysts and experts on social media to get insights into market trends and potential investment opportunities. Number 3, brokerage firms. Brokerage firms like Charles Schwab, TD Ameritrade, and E-Trade provide investors with access to real-time stock market data, research reports, and trading tools. These firms also offer educational resources to help investors make informed investment decisions. Financial advisors. Many people choose to manage their investments and get advice on the stock market. Financial advisors can provide personalized recommendations based on an individual's financial goals, risk tolerance, and investment horizon. Number 5, company earnings reports. Investors who focus on individual stocks often rely on a company's earnings report to make investment decisions. These reports provide detailed information about a company's financial performance and can help investors assess the company's potential for growth and profitability. No matter what survey you look at, no matter what tally you look at, there's always one thing that they all have in common. Nobody, and I repeat, nobody or hardly anyone likes to go to the source and get their information from the source, which is what this video is going to be all about. Just ask ChatGPT. We talked about all of those different things aforementioned in the last slide, and I brought up SEC filings from the SROs, and this is what ChatGPT had to say. It's difficult to rank the sources of factual market information in an absolute best to worst order, as the most appropriate source will depend on the specific information needs of each investor. However, here's a general ranking based on the reliability and usefulness of each source. Number 1, SRO filings. As previously discussed, SRO filings are the actual source documents filed by companies with regulatory bodies, such as the SEC, and they provide detailed information about a company's financial performance, management practices, and regulatory compliance. SRO filings are generally considered to be a reliable and authoritative source of information, but they may be difficult to understand for investors without a background in finance or accounting. No longer is that the case, and we're going to get into that at the end of this video. So if you've been feeling helpless, feeling like you just can't possibly learn this stuff, you can. Don't let that thought get the best of you. You can do whatever the hell you want. Your mom and dad have been telling you it since you were a little kid, and that is some accurate stuff right there. Number 2, financial news websites. Again, the stuff we already reported on, but the number 1 source, according to ChatGPT, and according to me and most people in the industry, is going to be the source documentation from the SEC filings, from the cited works, out of the DTCC, out of the big agencies like FINRA and your regulatory bodies. That is where the crux of the important information comes from. And from there, it can only get passed around to avenues like social media, YouTube, Twitter, websites. But then the question is, on its way to all those different third-party avenues, how much is the information misunderstood, misinterpreted, or distorted by the time it gets to you? That's the thing. So, what the heck is an SRO filing? Let me go ahead and talk about that. So, when you look at the markets, there is a big issue with market share. There is lit exchanges, which have on-exchange volume, and then there is non-lit exchanges, which do not. There are 16 currently registered lit market exchanges that trade in the U.S. markets, and those are the NYSE Floor, NYSE Arca, NYSE National, NYSE Chicago, CBOE EDGA, CBOE EDGX, CBOE BYX, CBOE EDGX, and the CBSX, which is just the CBOE exchange. NASDAQ BX, NASDAQ PHLX, which is Philadelphia, and then the NASDAQ. Long-term stock exchange, IEX, MEMX, and MIAX Pearl. Those are your lit stock exchanges. And all of these bodies will have to file on a regular basis filings to stay in compliance with the underlying laws that do govern the securities markets. And you can view these SROs at any time. You can view their market share charts at any time just to see the crisis that is actually a reality as far as market share by going to the CBOE website. Don't worry, I'll link that at the end of this in the description below. But yeah, there's tons and tons of tools that you can use and utilize, and a lot of these tools are actually provided for you in the filings. So, that being said, let's move on. So, where do I get the info from these SROs? That's where it gets a little bit easier. The Federal Register. All SRO filings must be posted to this website before they are approved. And that is the requirement for all of them. You would want to go here, and don't worry, I'll link this as well, to the Dodd-Frank Wall Street Reform section, and then specifically the Securities and Exchange Commission. Once you do this, at the very top of the following page, on the SEC page of the Fed Register, you will likely see red texted documents at the top of that page. What these are self-regulatory organization filings. And you see here proposed rule change, proposed rule change, proposed rule change, and then all of those different exchanges we talked about, other than the ICE Clear Europe, that is actually a clearing service. But we have the NYSE American, NASDAQ PHLX, NYSE Arca, CBOE Exchange, MIAX Pearl, FINRA. So the question is, if wherever you're getting your information from isn't aware of all of these new regulatory rules that come out that could very well be, making a drastic effect on financial markets, then you can't possibly rely on the information, because you have to make sure you stay up to date with current market developments. Now, I know it may seem unrealistic to follow this many filings in one sitting, but that's the beauty of technology, because you no longer have to do that. But before I get into the kicker, let me just go over what the SEC filings look like and the anatomy of such filings. So again, you have all these different ones here. Other than ICE, they're all SROs, and other than the privacy of consumer finance information and safeguarding, that's another amendment that the SEC's working on that they made a speech about last week or the week before that. But you basically click on any of these, and then it will open up the filing, give you the title, let you know what it's about, and there is a structure to these filings that is consistent throughout. And what that structure is, you're going to find the purpose of the filing near the very top. Then you're going to have the self-regulatory organization statement of the terms of substance of the proposed rule change. Now, don't let all the fancy words and text scare you out of trying to understand this stuff. They do this on purpose. It's just legalese. Basically, what that means is the meat and potatoes of the filing. What the heck is this about? Why are you filing this filing? Then you get your statutory basis, which is basically the reason why you want to implement these changes and any problems that are currently in existence due to the previous structure that was set up before this new amendment or new filing was proposed. And please, the super notes at the bottom of the pages, the small numbers that you see, these sometimes can provide you with the most useful information that you will find in the entire document. I've learned more from reading the footnotes or super notes than anything else so far, which is pretty funny. So, how the heck do you read these things? That's where it gets a little bit easier. Even today, just a year and a half ago from today, night and day difference. I'm going to share that with you at the end of this. But basically, at the very top of the filing, you're going to get what the filing is. the release number, the filing number, the title, of course, what date this was put on the register. Then again, you're going to have the substance or the self-regulatory organization's statement of the terms of substance. And they're going to basically tell you what they're doing. The exchange proposes to modify the NYSE ARCA options fee schedule regarding, number 1, credits for qualified contingent cross transactions, 2, applicable to routed orders, and 3, certain market maker incentives. So you probably don't know what a qualified contingent cross is, but that's okay. If you don't know what the term is, write it down and save it for later. The proposed rule change is available on the exchange's website, at the principal office, and at the commission's public reference room. So that's the substance. Then we would quickly scan the purpose. The purpose of this filing is to amend the fee schedule to provide for additional credits to qualifying submitted brokers for QCC transactions. Now, keep in mind, there's a super note there. We're going to get to that in a minute. And clarify the cap applicable to QCC credits and floor brokers rebates earned through the manual billable rebate program, otherwise known as FB rebates. And then number 2, they're going to modify the routing fees applicable to routed orders. And 3, eliminate the market maker incentive for penny issues and the market maker incentive for non-penny issues, which are collectively the market maker incentives. The exchange proposes to implement this rule on March 24th. Now, you may be asking yourself, but wait a minute, it's April 5th. So how could this be true? Well, so in the text of a filing, if they say and they state an implementation date, that date does not matter until the document is published to the Fed Register. So although it says March 24th, 2023, this will actually not go into effect until tomorrow if it is approved. And I actually need to go back and look, and I'll do it at the end because I didn't check to see if this was filed immediately. Some of them will be filed immediately. Some of them will take time. Some of them will have an amendment. Some of them will be taken to court to determine if it's going to be approved or not. It just depends. That's where the title comes in handy. So that's the purpose section of the filing, and they're mainly all structured the same way. So that's working to your advantage. So now let's get to this supernote, supernote 5. So you may be asking yourself, what the heck is a QCC transaction? Well, supernote 5 actually gives us this information. A QCC order is defined as an originating order to buy or sell at least 1,000 contracts that is identified as being part of a qualified contingent trade coupled with a contra side order, or in other words, contra side just means other side. So the contra side of a buy order would be a sell order, and the contra side of a sell order would be a buy order. The contra side of a reverse repo would be a repo, and the contra side of a repo would be a reverse repo. But anyways, contra side orders or orders totaling an equal number of contracts. That's basically what a QCC order is. Then within the purpose section, you get specific talking points within that purpose. So again, they told us 3 things they were going to do, and those 3 things are actually discussed in different sections throughout the filing, all underneath that purpose area. So QCC transaction costs, routing fees, and then market maker incentives would be the third one because that's the thing they brought up. So again, it's just a process, and if you get yourself into the habit of reading these and reading it in an efficient manner, you will save yourself a lot of headache. You'll know a lot more about the markets, and you'll have to rely on other people a lot less, which is the end goal. Now, this is the beauty of today, because you no longer have to go through and read it all and try to understand it, because we have technology to help us in this feat. And that technology is ChatGPT. So when you open the filing, if you want to know what the purpose is, just copy it, paste it over to ChatGPT and ask it, please summarize this SEC filing, paste it, go back to the filing, go find another section, maybe copy the QCC transaction credits if you weren't sure about what that meant. Basically, everything that you don't understand, go back and copy it to ChatGPT. Copy this whole paragraph here. I didn't even read it. You just take it and paste it back to ChatGPT. Routing fees, whatever you don't understand, you can put into this prompt. And obviously the prompt won't take the entire filing in one fell swoop, so you might have to do a couple or a few, but that's okay because it remembers your conversation. So again, we just copy all of this stuff and we paste it back to this ChatGPT, which you can automate, and I am working on automating this process, and then it just spits out an answer for you and gives you a nice summary. And then you can paste the next part, and it will give you the reason why they've done it. So pretty incredible stuff. Pretty incredible stuff. So before I let you go, let me just go back to that so I can read you what it said. The summary of this says the SEC filing proposes changes to the fee schedule of the exchange, which include additional credits to submitting brokers for qualifying QCC transactions, modification of routing fees, and elimination of market maker incentives for penny and non-penny issues. QCC transaction credits will be clarified and modified, while the routing fees will be charged on a per-contract basis for orders routed and executed on another exchange. The market maker incentives for penny and non-penny issues will be eliminated. These changes are proposed to be implemented on March 24th. Then, the next section I posted here, it came back with the exchange has proposed to eliminate the market maker incentives because they have not been effective in encouraging market maker posted interest as compared to other similar incentive programs. The market makers are entitled to the highest credit on posted interest they achieve, and other volume incentive programs available to them offer higher credit amounts than the market maker incentives. Therefore, they're removing it. As a result, market makers have not used the market maker incentives as frequently. The exchange believes that market makers would not be significantly impacted by the elimination of the market maker incentives, as other more utilized volume incentive programs would continue to be available to them. So again, it's very, very, very easy to do now as opposed to a year and a half ago when I was manually going through and reading all these things. But this takes a lot of that time out of the equation, which gives you and frees up your day to do other things. But, over the last couple of years, all I've seen in the investing space is nothing but poison seep into everyone's mind. And, it's kind of sad to see because all of these technological tools to help us think critically and think as individuals now exist that we can leverage to fight against all this misinformation, virtue signaling, just cults of hopes and dreams. None of that stuff's reality, especially in financial markets. So again, I hope this video helps somebody. I will be coming back and covering filings more often than not. I just got a lot on my plate right now. So give me a few more days to get everything sorted out, but I'm working my way back slowly. And I hope you all enjoyed this one, and I hope you all have a good rest of your day. Take it easy.